Your bank just collapsed. Not hypothetically, not in a movie. You open your phone this morning, you see the notification, and your stomach drops before your brain even finishes reading the sentence. The branch near your house has a handwritten sign on the door. There are people standing outside it. Some of them are on their phones. Some of them are just standing there, staring at the locked glass door like, if they look hard enough, it will open. Your money is in there, was in there. Here's what nobody tells you before this happens. A bank doesn't actually hold your money. Not the way you picture it. Not a vault with your name on a box, your savings sitting untouched in the dark. The moment you deposited that money, it stopped being yours in the way you think. The bank took it, logged it as a liability, and immediately lent most of it to someone else. A mortgage, a business loan, a credit card balance belonging to a stranger 3 cities away. Your savings are his debt. His debt is someone else's investment. The whole thing is a chain, and chains break from the middle. Banks fail for one of 2 reasons. The first is insolvency. Bad loans, bad investments, assets that lost value faster than anyone modeled. More owed than owned. The second reason is scarier because it can happen to a perfectly healthy bank overnight. A run. Someone hears something. A rumor. A news headline. A tweet from an account with 40 followers. They go to withdraw their money. Their neighbor sees them and does the same. Word moves fast. By morning, there's a line. By afternoon, the line is around the block. The bank doesn't have enough liquid cash to pay everyone at once. No bank does. That's not how banking works. And the moment people understand that, the panic accelerates. Silicon Valley Bank. March 2023. Went from stable to collapsed in 48 hours. The run happened on phones. People transferring money out digitally, faster than any physical queue in history. $42 billion withdrawn in a single day. The bank didn't survive the morning after, so it's gone. Now what? This is where most people discover something they were never taught in school. In most developed countries, your deposits are insured. In the United States, the FDIC covers up to $250,000 per depositor per bank. The government created these systems because bank runs kept destroying ordinary people's savings throughout the early 20th century. If your balance is under the limit, you will get your money back. Not immediately, not without paperwork, but you will get it back. The FDIC has never failed to pay an insured depositor. Not once since 1933. If your balance is over the limit, the situation gets complicated. You become an unsecured creditor. It means you join a queue. Behind the secured creditors, behind the bondholders, behind the people whose contracts legally put them first in line. You are near the back. The back of the line in a bankruptcy proceeding moves slowly. Sometimes it doesn't move at all. Sometimes what's left when they reach you is cents on the dollar. Sometimes it's nothing. The businesses that kept operating accounts above the insured limit at Silicon Valley Bank found this out very suddenly. Payroll accounts, operating funds, money set aside to pay employees that Friday, frozen, inaccessible. The companies hadn't done anything wrong. They'd simply kept their money in one place, the way everyone told them was responsible, and then the place stopped existing on a Tuesday. The government stepped in that time. But that was a choice, not a rule, not a guarantee. A choice made under pressure that could just as easily go the other way next time. The people who lost the most weren't reckless. They weren't gamblers. They were doing exactly what they'd been told to do. Save, deposit, trust the institution. The institution failed them, and the system they'd been told would protect them had a limit they didn't know about until it did. The bank teller who helped you open that account didn't mention it. The fine print existed, technically, somewhere, in language designed to be understood by people whose job it is to understand it. The locked door has a sign now. It has a phone number. The hold time is 40 minutes. You stand outside the glass door. The handwritten sign doesn't move. Somewhere a few cities away, The stranger whose mortgage was funded by your deposit is making his monthly payment into an account that no longer exists. The chain is broken. The money is still moving. Just not toward you. It was never sitting there. It was always moving. You just didn't know where.